Good morning from our global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. AI deals galore. President Trump clears the path for tech deals in the Middle East, with chip makers planning to spend billions of dollars. And more deals stateside. House Speaker Mike Johnson says that Republicans could reach a compromise on the state and local tax deduction as early as today. And back in black, U.S. stocks erase this year's drop as trade tensions cool. And that turnaround in U.S. stocks, it has been really remarkable. Bespoke noting that we recovered the 15% year-to-date drop in less than 6 weeks. That's the fastest pace of a turnaround since 1982. Yesterday, it was about the AI deals with Saudi. It was about cooler than expected CPI. So we were off to the races. But this morning, very calm. Little change for both your S&P and Nasdaq futures session. Russell 2000 futures, those do underperform after a big day for the index yesterday. Your bond market also a bit calmer, but we are finally seeing bond yields on the front end below 4%. We priced out more Fed cuts, only about 2 this year, but the 30-year yields, those did close at the highest since January, so not all of this bond market acting the same relief that we've seen. By the way, the dollar also not able to get back into the green for this year. It is still down on the year despite what equity is doing. South Korean officials moments ago confirming that FX currency had been part of the talks with the U.S. Are we going to focus on dollar policy out of the White House instead of trade as we move forward? All right, that's your overall markets. Let's get some stocks to watch this morning. With that is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So we are expecting to see a third day of gains for Nvidia today. That stock rising at around 2% in the pre-market. It gained 10% in the previous 2 sessions as Trump does make his deals over in the Arab Emirates and also, but we have got Intel on the screen there. But bear in mind, Nvidia is ticking higher. Take my word for it on that one. We're seeing that gain of around 2% this morning. Intel slightly lower meanwhile. Then we've also got a bit of a clothing theme. American Eagle absolutely slammed in the pre-market, pulling its guidance alongside a few other companies that we've seen doing a similar thing, kind of due to the trade war on that one. That stock down 14% at the moment. Then one I'm more familiar with, we've got the owner of Calvin Klein and Tommy Hilfiger, PVH. That one's upgraded over at Jefferies, who reckons those brands are doing a bit better with young people. And I think we're going to bring up Nvidia finally on the final one on that screen there. There we go. I knew I hadn't missed that or misread that one. We're up almost 2%, or Nvidia, following those deals in the Middle East made by Trump. Back to you, Danny.
You got to show the people what they want, and that's what Nvidia is doing every morning and this morning. Joe, thank you so much. We'll catch up with you later in the hour. Bloomberg's Joe Easton. And speaking of this hour, in just a few moments, we're going to be speaking to Kallum Pickering of Peel Hunt. Later, we'll be catching up with Marvin of State Street. 2 conversations you do not want to miss. Well, the S&P 500 has erased its losses for the year, but many still looking cautiously for 2025. Kallum Pickering, chief economist at Peel Hunt, writes the Trump administration is walking back its tariffs gradually through a series of deals, but tariffs and barriers to trade will remain appreciably higher than pre-Trump, with significant negative economic consequences for the U.S. economy. I'm pleased to say that Kallum joins us now. Kallum, great to see you. So how much did Monday change your economic outlook for America?
Well, it hasn't changed it much. I think the assumption, or dare I say, the strong hope, was that tariffs would come down between the 2 largest economies in the world. The problem I have at the moment, and this is the sense I get when I speak to people, is, okay, risk markets, equity markets are moving up. But if I look at consensus expectations for US real GDP for this year and next year, they're still coming down. I see inflation expectations for this year and next year still going up. And so there's a bit of a contradiction here. Markets are pricing in hope that things will be okay. But actually in the numbers, analysts are telling us we're becoming increasingly worried. And I think part of this is just this, at the moment, this gap between the hard data coming out of the US, which is essentially pre-tariffs, and that the last CPI print is a good example of that, and the soft data, which still looks worrying. And so my nervousness over the next few weeks comes from the fact that if the hard data start to catch up with the weak soft data, if these analyst expectations for weak growth start to play out, then you might find actually that suddenly risk markets come down a little bit again, and then we go through another period of volatility.
Kallum, you read my mind, because that's where I wanted to go, that we can live on this hopium because it's not showing up in the data yet. How long do you assume that it will take for the hard data to actually start to reflect some of the tariff uncertainty, some of the companies' freezings of a capital expenditures plan? When does that finally flow through and maybe throw a wrench into the equity market rally we've seen?
Well, hopium, I like that. That's a great way to describe it. The thing is with Q1 was bad and it was distorted for all sorts of complicated reasons. At the moment, it's early into Q2. We don't have much data for April for real economic activity, but I do expect to see it through May and through June. We should start to see weakness in consumer spending. We should see weakness in capital and capital expenditure plans. But the thing that people should keep in mind here, there's a structural component, which is the cost of tariff policy, which is yet unresolved, to be clear. But then there's this cyclical risk coming from the fact that even if we abstract away from these tariff policies, the likelihood that the US economy would just moderate this year was pretty high anyway. US consumers were saving almost nothing last year. You had markets pricing in huge amounts of good news. You had 2 years of extraordinary fiscal stimulus under the Biden administration that was due to wear off. And so what you actually have is you have this cyclical downward momentum and then these structural downside risks. That's a lot of pain potentially to come through to the US economy. My base case is actually not recession. I see about a 35% risk of that. The lesson from, say, the UK Brexit was actually economies tend to muddle through. The US economy is very dynamic. But I still find this hopium that you mentioned is just the theme in markets, and I don't see how it's very sustainable at this stage.
Does that mean we're misplaced pricing in just 2 cuts from the Fed this year, Kallum?
That's a great question. I think the Fed, in all likelihood, would prefer to be cutting interest rates given the downside risks and given the fears of recession. But you need to get through this very likely immediate hump in prices as firms try to pass some of these tariffs on to consumers in the US. And that puts the Fed in a very difficult position. It's dual mandate, maximum employment and price targeting. Stable inflation is on a collision course with tariff policy. The last thing the Fed wants to do after this very bitter period of inflation that we have just had is start cutting interest rates as prices are rising. Keep in mind, the Fed normally reacts more strongly to downside risks to growth and employment than upside risks to inflation. So this is a very unusual situation. My hunch is we'll get 3 cuts this year. Once the Fed starts to move, probably in Q3, they'll start to move quickly, but at least for now they have to sound hawkish.
Well, what we saw in the data yesterday, Kallum, was this fear that Priya Misra from JP Morgan talked about us yesterday, the idea that services inflation starts to decline and goods inflation starts to reaccelerate. To her, that was a red flag and a warning that consumers are soon going to have to make hard choices, and you get some sort of demand destruction coming in to this economy. Is that a concern for you, too, that flip for where the inflation from the data is coming from?
That's absolutely right. So if we get significant goods price inflation, especially in inelastic categories, those are the essential products, not discretionary spending, just essential products. And this is happening as consumers are turning fearful and as broad financial conditions tighten. What you'll find is consumers will be forced to reallocate spending from discretionary services towards non-discretionary goods. That actually may make the arithmetic a little bit easier for the Fed, because if they can say, well, look, services prices give us a better handle on underlying inflationary momentum, goods prices are giving us a signal to this self-inflicted inflation shock, actually we can look through this a little bit and we can start to sound a little bit more dovish. But for me, the key question for the Fed is over the next 2 to 3 months, which breaks worst, inflation to the upside or economic data to the downside? Ultimately, that will decide the trade-off that the Fed makes between its inflation and employment mandates.
Kallum, how difficult is the data going to be to understand over the next few months, especially as we're in this 90-day pause and there are reports of shipments taking off nonstop about ports all of a sudden being overrun? The assumption is that they will be to get ahead of what happens after 90 days. Is the data going to be really hard and difficult to parse through?
It will be extremely difficult to pass to. What I would recommend is just making an idea, come up with a concept of something like core GDP. I think Bloomberg actually came up with some kind of indicator like this. It's very useful. So that's consumer spending, it's parts of business investment. It also includes some government spending. That gives a handle on the domestic momentum in the US. That probably gives a better guide because it takes away some of these trade and inventory distortions. But what we're likely to see is two things. One, wild gyrations in imports and exports as firms try to guess and move ahead of any potential rising tariffs after this 90-day pause. But also what I describe as event horizon risk. This is where the administration sets up these event horizons where we can't do anything until we know what kind of world we're in. Is it world A or is it world B? And there's very little overlap between those two worlds. And so as we face these rolling event horizon risks, the incentive is for firms just to pause investment. It's for consumers just to pause big ticket. And so these two things happening, these gyrations linked to tariffs moves, but also this event horizon risk, complicate the economic story enormously.
Kallum, this was an absolute masterclass. Thank you so much for joining us this morning.
Well,
that is Kallum Pickering of Peel Hunt. Let's get you now some other top stories that are trending on the terminal this morning. Tencent's revenue beat estimates after growing its gaming and social media portfolio through a persistent Chinese economic slowdown. Revenue for the 3 months ended March rose to $25 billion. Its net income increased by 14%. Tencent has benefited from the Chinese tech renaissance triggered by DeepSeek, with its apps gaining users since integrating with DeepSeek's offering. The U.S. and South Korea have agreed to continue discussions on FX policy. That's according to sources. The South Korean deputy finance minister met with the assistant secretary for international finance in the U.S. Treasury Department on May 5th. The dollar is now declining as signs grow that the Trump administration is shifting focus from trade to exchange rates. And a Swiss court has ruled that the government's decision to strip bonuses from a dozen former Credit Suisse bankers was unlawful. The country's finance minister had issued an order following the bank's rescue by rival UBS in March 2023. It told Credit Suisse to cut bonuses for its executive board members by reducing them by 50% for managers 1 level lower and 25% for employees 2 levels down. Coming up, the Trump administration clears the path to AI expansion between the U.S. and Saudi. We'll have more on the deals and Trump's visit to the Middle East. That's coming up next.
I've seen such progress. It's really incredible. I've also seen great unity and friendships. I've spent a little time with you just before this, and I've seen tremendous unity, tremendous friendship, and the whole world is watching the Middle East, and many are watching with envy. You have something very special going on.
President Trump speaking in Riyadh moments ago as he prepares to finish the first leg of his Middle East tour. The Trump administration has been clearing the way for allies in the Persian Gulf to expand their capabilities, and big U.S. tech is capitalizing on the opening. Humain, a newly formed firm coming under Saudi's PIF, is at the center of the slew of deals with NVIDIA, AMD, Amazon, and others. Let's get more details from Bloomberg's Stuart Livingston-Wallace, who leads our coverage in the Middle East. Stuart, just what did we get out of the Middle East visit so far? It has been deal after deal.
Yeah. I mean, the scale of it is really quite impressive. And we haven't quite totted up the numbers. And there's a caveat here in that many of those deals are not necessarily finalized, importantly. Secondly, there have been some worries expressed back in Washington from some of the hawks, particularly around, concerns about China getting access to some of this tech. But at least on the face of it, we're talking about hundreds of billions of dollars of deals. A very, very significant part of that is the tech side. So the so-called tech diplomacy kicked off in full swing. We saw basically every tech leader on the planet show up in Riyadh yesterday. And the mood on the ground was pretty jubilant because this has been a fraught issue for a number of years. So assuming all of those issues can be resolved and that everyone can get on board with it, I mean, it does signal a major shift in terms of where that tech is going to sit in the future. And again, if all those deals come through, then basically the Arabian Peninsula pushes itself up into a similar sort of position that the US has and China has in terms of AI.
What about the investment coming the other way? The President Trump announcing that Saudi would invest about $600 billion in the U.S. Paul Donovan of UBS pointing out that that's about 60% of Saudi's GDP. What might that look like, Stuart?
It is, and there were promises that they're going to try and get it up to $1 trillion, which would be basically all of GDP. So again, some caution with those numbers. Some of those will be previously announced deals, some of those deals will never happen. But I think whatever the final number, again, the scale of those deals is incredibly impressive. I suspect a large number of them will come to fruition. It is absolutely in the interests of the peninsula, specifically Saudi Arabia and the UAE, to get their economies away from oil or the dependency on oil. They know that's going to run out eventually. And there's a really serious push now to expand both their industry, to expand their technology, to expand their general involvement in global trade into something that doesn't involve energy. So, certainly from the side of the Arabian Peninsula, there is great appetite to do this.
Stuart, before we let you go, just quickly, Trump also made some news in terms of U.S. relations with Syria. What did we get there?
I mean, again, quite surprising. I mean, that was the sort of the moment in his rather long speech yesterday in Riyadh where he got a standing ovation. He was clearly encouraged to do this by the Saudis and others because this is the way they see it, that for all the questions there are about the leadership in Syria, and obviously the background is in terrorist organizations, they are very keen for Syria to come back into the orbit of the Arab world and to basically uncouple it from Iran. So for many years under the former regime in Syria, it was backed by Iran, it was supplied by Iran, and that's ultimately what they're trying to get away from. So that intersects almost perfectly, I think, with Trump's intention here, which is to create a counterweight on the Arabian Peninsula going forward, a counterweight against Iran, so that US involvement in the region doesn't have to be on the scale that it traditionally has been in the last couple of decades.
Stuart, thank you very much for that excellent update. That is Stuart Livingston Wallace. Now let's turn back to Washington, D.C., where lawmakers have also been busy. House Speaker Mike Johnson told reporters last night that Republicans could reach a compromise on the state and local tax deduction today. Let's bring in Bloomberg's Joshua Gallo on this. Josh, so the SALT tax breaks looks like it might be coming up today. What might we expect from a deal?
Well, it looks like Speaker Johnson is prepared to try and push through a deal that would raise the cap from currently $10,000 to $30,000 for individuals making up to $200,000 a year. That would, of course, be tripling it from the 2017 deal. But this is a really thorny aspect of U.S. tax policy, and it's highly politicized. The reason is that it mainly affects areas that like California, New Jersey, New York, with very high property values and relatively high tax brackets. So people really want to be able to deduct more of those state and local taxes from their federal taxes. The problem is, of course, the Trump administration is looking for revenues to pay for their overall tax cuts, so that's not helpful for them. From a political perspective, of course, Trump is the one who really wanted to cap this back in 2017 because it hits primarily Democratic states. So, but now he's got to help his representatives in those states that have been hurting from that cap, and also sell it politically in areas that are less prosperous, that are going to see cuts to things like Medicaid and food assistance, while at the same time seeing breaks for areas like affluent areas like California and New York.
Well, this has been an extremely thorny issue, Josh. If House Republicans are able to come to an agreement on this, does this suggest that there is room for a more easy passage of, in total, the big, beautiful bill?
I think so. I mean, Speaker Johnson wants to get this over to the Senate soon. He wants it out of committee, and his aim is to get it to Trump by 4th of July. That, of course, is a pretty tight time frame. That's only about 7 weeks from now. So, and a lot needs to be done. But this is one of the biggest sticking points. If they can come to an agreement on the state and local tax deduction, they will have gotten past a very big hurdle in getting all of their members in those key states on board. And they have to do that because they're proceeding with, budget reconciliation, where they can bypass a process that would have to get Democrats on board. But in order to do that, they need all of the Republicans to vote with them.
Josh, thank you so much. That is Bloomberg's Josh Gallo with the latest in Washington, D.C. Now, coming up, we're going to take a look at what else is making headlines around the world. We'll peep into the front pages. That includes China's attack on the U.S.-UK trade deal. That's coming up next on your Bloomberg Brief. Let's take a look at the front pages this morning. First up on the Washington Post, they lead with President Trump announcing plans to lift sanctions against the Syrian government and a willingness to negotiate with Iran. Trump also said today he'd explore normalizing relations with Syria. It signals a reordering of foreign policy, which there are no permanent enemies. Next up, the Wall Street Journal has this, that Health Secretary RFK Jr. bid to label pesticides as a potential cause of health problems has seen some pushback from the White House. Trump had pledged on the campaign trail to investigate pesticides as part of an effort to win support from Kennedy backers. And finally, on the FT, China has criticized a trade deal between the UK and US. Beijing said it was a basic principle that agreements between countries should not target other nations. It has also warned countries against signing trade deals with the U.S. that threaten Chinese interests. All right, as we head to break, let's get a check on currencies. The won rising this morning after South Korean officials confirming that FX talks were indeed part of the talks with the U.S. The dollar overall weaker this morning. Coming up, we'll catch up with State Street's Marvin Lowe. This is Bloomberg. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. AI deals galore. President Trump clears the path for tech deals in the Middle East, with chip makers planning to spend billions of dollars. And more deals stateside. House Speaker Mike Johnson says Republicans could reach a compromise on the state and local tax deductions as early as today. And back in black, U.S. stocks erase this year's drop as trade tensions cool. And it has been a remarkable rebound for U.S. stocks, undoing the 15% year-to-date losses in under 6 weeks. Bespoke pointing out that that is the fastest recovery since 1982. We're unchanged this morning for both the S&P and Nasdaq futures. Your Russell 2000 futures a little bit weaker, down by about 0.2 this morning. It was excitement over softer CPI tech deals in the Middle East yesterday that had us pricing in just 2 Fed cuts for this year. For now, that brought front-end yields below 4%. We're below 3.99 this morning, down another basis point. Your 10-year little change, but that 30-year yield stays stubborn. It closed at the highest level since January yesterday. And you can see on the bottom of your screen the dollar weak, that unable to recoup the year-to-date losses despite what the equity market is doing. Okay, let's get some stocks to watch this morning. With that is Bloomberg's Joe Easton. Hey, Joe.
Hey, Danny. So there's strength in the chip makers once again following news of these deals over in the Middle East. Nvidia set for a third gain. We've had a 10% rise in that stock over the past few days, and we're up another 1.8% in the pre-market, given news of that deal with the UAE. And then Supermicro, smaller company, but up almost 8% on news of a pact with Saudi Arabia. Both of those moving higher. Then in terms of the clothing stocks, American Eagle Outfitters absolutely slammed in the pre-market this morning. We're seeing that one down close to 15%, pulling their guidance due to consumers cutting back on shopping and the weakness in consumer sentiment, according to the company. Then another look at the owner of Calvin Klein and Tommy Hilfiger, one I'm a little bit more familiar with. We don't actually have American Eagle over here in the UK anymore, but that one up 2.7% as Jefferies recommends buying due to strength among younger consumers, according to the broker. That one rising 2.7% in the pre-market this morning, Danny.
Joe, even if it was in the UK, I can promise you it is not for me and you, the demographic of American Eagle. So you're not missing too much. Joe, thank you so much for joining this morning. Bloomberg's Joe Easton. Now, State Street's Marvin Lowe has been weighing in on the latest trade developments, and of that, there have been a lot. He writes, quote, "It does appear as if the administration has shot its bullets, and the worst case is now part of the market narrative. Given the much cleaner positioning that investors now maintain, we should be able to build on risk assets, although a period of consolidation comes first." I'm pleased to say that Marvin will join us for the rest of the hour. He is senior global macro strategist at State Street. Marvin, great to see you.
Great to be here.
All right, so a period of consolidation first, and then some gains. How are you thinking about where we move forward from here?
Yeah, I mean, a challenge really is that we've recouped so much in such a short period of time. So, everyone's clearly looking at the statistics that we are now flat for the year for the most part. But don't forget, during that period, earnings for the year have come down, and a lot of that has come out of the first quarter conversations with companies that, there's just a lot of uncertainty around it. But the general trend is that it's going to be weaker from an earnings perspective than when they thought at the beginning of the year. So the fact that we're actually back to kind of that level playing field means that we've expanded multiples to get here. So, really one has to look at whether or not it should be as broad-based as it is. And then you've got other asset classes that are not necessarily recovering as aggressively. And are there messages in that? Kind of having said that, we have certainly come off the cliff. There's an opportunity to continue to build on risk, but, I don't necessarily think that it's as all clear as kind of this really strong rally that we've seen over the last couple of weeks signifies.
Well, the dollar's certainly been one of those notable asset classes that hasn't come back with the rest of the equity market. You ask if there's a signal in it. Is there a signal in it?
You know what? Certainly it is. A weaker dollar has been, I believe, one of the goals of the administration. It's not necessarily a bad thing, particularly if it could be done without a lot of the turmoil that kind of was associated with it earlier during the volatility. But kind of having said that, with tariffs, a weaker dollar, both of them equal higher prices. So, this kind of inflation story, even though we've got a decent CPI to kind of grab onto now, is still a story that's really in flux.
I want to talk about the inflation, but first on this idea of a still weaker dollar. Does that cap some of the gains in the equity market? Because for all of us sitting here in America, you're back into the black for the year. But if you're a foreign investor and you haven't hedged your dollar exposure, you're still under pressure at the moment because of that weaker dollar. Does that prevent foreign flow from coming into the U.S.?
Not necessarily. There is this trend that I kind of see where it's easier to buy U.S. companies than it is to buy the U.S. government. And the U.S. government is really encapsulated in the dollar. It's encapsulated in Treasury securities. And we're seeing the power of U.S. Corporations make their way in kind of through a lot of these Saudi agreements. Having said that, do you go in and buy U.S. assets without hedging? And if you ultimately do hedge those assets, you wind up with a weaker currency as part of that. And one of the big trends that we saw leading into this year was a very, very low hedge ratio relative to historic standards. Because the strong dollar, U.S. exceptionalism, there was no reason to hedge it. You're starting to see kind of cracks in that, and it does have an impact on the currency for sure.
Back to the idea of inflation. There had been a thought, and Anna Wong from Bloomberg Economics has been leading the charge on this, that if you have deals or at least pauses, it might be more inflationary because you have a stronger economy, people can spend more, and you get companies passing on. Plus, you have a tax bill that isn't as restrictive as most had feared. So the net sum of what we've gotten from this week is a more inflationary environment. Would you agree with that?
You know what, to a certain degree, it does create kind of a stagflationary type of concern. That's one side of it for sure. And the other side of it is confidence, just whether it's corporate confidence, consumer confidence. If given the means, I do believe the American consumer is one of the things that we can count on. But yes, having said that, you've got this impulse where people are rushing out to theoretically beat this tariff. And having these pauses, having these start on, start off type of environments just really is incredibly challenging for businesses that are planning. And, that's kind of the soft data that we're all waiting to see if it actually makes its way into the hard data. Remember, soft data is generally considered leading, hard data is generally considered lagging, and there's a reason we have those terms for that.
So if the hard data is going to be lagging, when does it show up, and what does that mean for risk markets that have been very happy to price it in as if it will not show up?
Yeah, for sure. You know what? I think it takes fairly significant events, unless all of a sudden the administration changes its mind. Go back to the reciprocal, we'll go back to the board and say this is the way we're going to start approaching things. If we don't get a shock like that and we get kind of these on and off and then these various carve-offs, it's going to be fairly difficult to get a sense of how long-lasting and what the ultimate level is. But you do have things like the debt ceiling, which will create a lot of liquidity kind of situations where ultimately if the government has to issue several hundred billions of dollars in debt to kind of make up for their piggy bank, which they've been using, that money has to come from somewhere, not necessarily from a yield call, which I also do think that there's ultimately a yield call, but when you need to reallocate money and the pool of liquidity becomes a little bit more scarce, then you see what people want to own and what people don't want to own. Right now, there's a decent amount amount of liquidity in the system, and we've got kind of a reprieve from what was a fairly challenging tariff trade environment to get over. It's natural for people to get excited again.
Well, the long end certainly has not been able to come down to the same extent as the front end. Obviously, you get a repricing of the Fed. How much of that is, all right, the trade thing, we seem to be walking back on that. That seems to be normalized. The next source of attention for this market needs to be deficits. For
sure. I mean, near and dear to my heart, spending a lot of time on the fixed income markets, really spending a lot of time in thinking how much compensation you need to go out the long end. Really, the two asset classes that have struggled to kind of come back from a lot of the turmoil, if we're looking at it from a year-to-date perspective, we're looking at it from a Liberation Day perspective, it is yields and it is the dollar. And again, both of those are kind of the most directly tied to what buying the U.S. government means.
Does that suggest then that there still is a lack of trust, that there's been some sort of damage done from the volatility in policy we've seen?
Yeah, I think that's an easy narrative to grab hold of. Can we put the genie entirely back in the bottle? I think that other countries are approaching relationships with the U.S. with more of a jaded eye, and I think that ultimately makes its way into kind of the way we approach investments, for sure.
All right, Marvin, you're going to be sticking around with us for the rest of the hour. I'm very pleased to say Marvin Lowe there at State Street. First, let's get you some other top stories that are trending on the terminal this morning. Now, Tencent's revenue beat estimates after growing its gaming and social media portfolio through a persistent Chinese economic slowdown. Revenue for the 3 months ended March rose to $25 billion, with its net income increasing by 14%. Tencent has benefited from the Chinese tech renaissance triggered by DeepSeek, with its apps gaining users since integrating with DeepSeek's offering. A Swiss court has ruled that the government's decision to strip bonuses from a dozen former Credit Suisse bankers was unlawful. The country's finance minister had issued an order following the bank's rescue by rival UBS in March 2023, telling Credit Suisse to cut bonuses for its executive board members by reducing them by 50% for managers 1 level lower and 25% for employees 2 levels down. NATO allies are working on an agreement to significantly boost defense spending. Negotiators are making progress on a path to achieve 5% of GDP on defense and defense-related spending by 2032. The agreement would mark the biggest spending increase by Western allies since the end of the Cold War. Coming up on the show, a floodgate of deals. President Trump secures investment in the U.S., clears the path for big tech to cut AI deals in Riyadh. We'll have more on the president's visit coming up next. You're watching Bloomberg Brief.
I've seen such progress. It's really incredible. I've also seen great unity and friendships. I've spent a little time with you just before this, and I've seen tremendous unity, tremendous friendship, and the whole world is watching the Middle East, and many are watching with envy. You have something very special going on.
President Trump speaking in Saudi there moments ago as the first leg of his Middle East tour winds down. Big tech at the center of President Trump's deal-making in the Persian Gulf. The newly formed firm Humain, coming under Saudi Arabia's investment fund, is at the center of a bunch of deals with the likes of NVIDIA, AMD, Amazon, and others. For more, we are joined by Bloomberg executive editor for tech, Peter Elstrom, and State Street's Marvin Lowe is still with us. Peter, a lot of deals. Break them down from us. What did we get over the past 24 hours?
Well, this is a quite significant change in U.S. policy around technology exports. The Biden administration had been implementing a pretty complex set of regulations where they were stopping the export of a number of different things, including NVIDIA chips that are used to train these AI models. What we've seen now is the Trump administration is essentially throwing out that framework. They formally repealed this AI diffusion strategy that the Biden administration had been using, and instead they're cutting these bilateral deals, including what we saw with Saudi Arabia, where they're trying to allow more of an export of those NVIDIA chips and other kinds of technologies to countries depending on certain circumstances that they negotiate. So in this case, you've got a quite big deal where this AI company in Saudi Arabia, Humain, is going to be able to buy NVIDIA chips and AMD chips. They're also getting other kinds of support from the U.S. We think this is part of a broader strategy as the Trump team goes through the Middle East. We expect more deals of this type as they go to the UAE in particular.
Peter, what about the security concerns? Part of the reason some of these chip sales were capped was for fear that they'd end up in the hands of China. Is there anything being done to address those concerns specifically?
Yeah, that's a very good point, Danny. That's totally unresolved at this point. So at a high level, they're saying they want to change the strategy and open the door to more exports of AI chips in particular, but they haven't worked out this very thorny issue of how they're going to deal with the China risks inherent here. In particular, in the past, they've been concerned that either the AI chips are going to get diverted from the Middle East into China, or companies are going to be able to tap into AI capabilities through cloud computing services within the Middle East, and they have not resolved that. There are tensions in the Republican Party at this point about whether the Trump administration is going to be able to do enough to mitigate those risks, or whether they still have to resolve them in some sort of way other than that.
Hey, Peter, question for you. Looking at the deals that were cut, particularly on the high-end semis, is it a bit of water in the desert, if you will, in that the kingdom has been restricted from owning this, and ultimately anyone that wants to build these AI models want to own more of it? But kind of this AI story, as it evolved over the last year and a half, has been an uplift for a lot of different companies. But can it expand beyond just these high-end semis, particularly after the kind of the DeepSeek shock that we got a couple of months ago?
Yeah, that's a very good question. Really, the development of these AI technologies has been led by the American companies and the Chinese companies. I think you have those two very powerful poles of AI development. Now you're seeing other countries try to jump in here and develop some AI capabilities that'll be beneficial locally, and perhaps they want to be able to compete globally too. As you mentioned, Saudi Arabia has a long ways to go to catch up just to compete on some of the most basic levels. The UAE has been investing for a bit longer. We do expect G42 in particular to be able to get access to a lot more chips than in the past. We have a scoop out right now talking about how the number of chips that they want to import into the UAE is going to be quite significant, roughly 4 times as much as they would have been able to buy in the past. So I think they probably have a bit more of a head start in terms of developing these capabilities. But both of the countries have a long ways to go to be able to compete on a global scale.
So after the China announcement started to come out, we saw NVIDIA pull back on its expectations with regard to how much revenues ultimately can collect from that part of the world. Does this, for the most part, offset a lot of that? Is that kind of where the commentary is going to go, that while we still have China concerns, we've got this really big wellspring that the advanced chip makers can tap into?
Yeah, you make a very good point. NVIDIA had been barred from selling its H20 chips into China. That was certainly a setback for them. They were quite vocal in their opposition to those new restrictions. They're worried about competition domestically from companies like Huawei in particular. This is directionally, it's certainly a benefit for them. They're going to be able to sell more into the Middle East to some of these customers. You see in the share price, the NVIDIA stock was up about 11% over the past couple of days as investors anticipate that they are going to be able to boost some of their revenues with sales into parts of the world like the Middle East.
Peter, thank you so much for joining us. An excellent roundup. That is Bloomberg's Peter Elstrom. And Marvin, as you point out, there has been a lot of excitement about these deals. NVIDIA surely took off yesterday. How much of that do you take with a grain of salt? Because we saw in Trump 1.0 that just because deals were announced doesn't always mean that they follow through.
Yeah, for sure. And the size of the deals that are being promised is a significant portion of GDP, which is where everyone's focused on. Certainly if you are in NVIDIA, if you're trying to figure out how you're going to make all these chips, you're excited. I really wonder if this is the U.S. manufacturing renaissance. Again, kind of that tall glass of water in the desert. It's easy when you've got a product that everyone wants that people couldn't really have access to because of restrictions that were put in place. Is this going to expand into other parts of the U.S. economy, which is really where all of this trade discussion had wanted to go? Bring back manufacturing, make U.S. more of a significant exporter. We were already exporting as many NVIDIA chips as we possibly could. They couldn't keep up with things. Is there other parts of this discussion which can actually benefit beyond just what winds up being the Mag 7 once again from a discussion perspective.
All right, Marvin, you're going to stay with us. Really interesting discussion there. I first want to get a quick look on the stocks that are moving in the pre-market this morning. And as we've been discussing, NVIDIA and AMD are moving higher on the back of the AI deal. We're also looking at United Health that is bouncing back after closing 18% in the last session after it announced that it would be replacing its CEO and cutting and completely removing, I should say, its outlook for the full year. Coming up, we're going to get you set up for your trading day and what to watch. That's coming up next on your Bloomberg Brief. This is Bloomberg Brief. I'm Danny Berger, and still along with me is State Street's Marvin Lowe in New York. All right, let's get you set up for your trading day today. We're going to hear from Fed Vice Chair Philip Jefferson. He'll be delivering remarks at 9 a.m. Eastern. Then RFK Jr. testifies before the Senate on President Trump's budget request for the Department of Health and Human Services. That's at 1 p.m. And then we'll get more Fed speak. San Francisco Fed President Mary Daly at 5:30 p.m. Marvin, that's certainly a lot of Fed speak. We had Goolsbee yesterday. Any reason to believe that they're not just going to say, we can be patient?
Unfortunately, no. Unfortunately, no. They just don't know. We heard it over the last couple of meetings. We certainly heard Chair Powell during the last presser really say that there's nothing I can do in as many ways as possible. So yeah, they're waiting for the data. Certainly the relief on the tariff discussion gives them a little bit more comfort in terms of the downside. But really, with the market expecting and really wanting rate cuts, nothing that's evolved makes that easier for them.
Yeah, I think it was 22 times that Powell in the last presser said some version of wait and see.
Exactly.
So a lot of uncertainty there. But they're waiting for the data, Marvin.
Yeah.
Not even just them, but how do you handle the incoming data? It's going to be really distorted as we have shippers rushing to get goods into the U.S. before this 90-day pause is out, as we still have companies sitting on their hands unsure of what to do, and as we likely have consumers also trying to get ahead of any potential price increases.
Yeah. Investing is a real interesting process because there's a lot of different ways of going about it. You could trade it, and that's a lot of times what we talk about, particularly these big moves. If you time the trade right, if you get the call, if you get that call correctly, you can certainly get ahead of it. But then there's a more intermediate, longer term perspective, which is where the asset allocation discussion goes. Like, where do I want to own what type of companies, where in the world? This is kind of a really good time to take a step back, particularly given the rally that we've had, and really look at your portfolio and think about where you want to be, and kind of have those broad markers around what you're looking in the data to kind of get you to your thesis. So, for the most part, traders are going to trade, but analysts that are looking at that intermediate term, they're really wondering how much can the consumer spend? What's GDP going to be? And what's the inflation and kind of interest rate environment around it? And I think that this is a time for us to really assess everything and understand what that data is saying those answers might be.
Well, here's one trade that's certainly going on this morning, and that is a weaker dollar. Let's just look at some of those crosses this morning, because you are looking at the Bloomberg Dollar Index down by about 0.5%. Marvin and I had been talking about this, unable to make new gains with the dollar. Literally 30 seconds, Marvin, but Korea and the U.S. talking on FX. Is this the next target for the administration, a weaker dollar?
You know what? Certainly it does seem to be the focus on many of these conversations, whether we were talking about Taiwan, whether we're talking about, South Korea now, and it is one of the goals of the administration to somehow prop up manufacturing through that weaker currency.
Marvin, and it has been such a pleasure to have you join for this half hour. Marvin Lowe there of State Street. And that is it for your Bloomberg Brief surveillance. We'll take the reins from here. You're watching Bloomberg.